Well, almost 2 years after demonetization, which saw the government demonetize 1,500 rupee notes to curb black money ostensibly. However, RBI's 2017 annual report released today states that over 99% of the banned currency has returned to the banking system. How much of this is black or white? The jury is still out. Demonetization, of course, has led to a mega thrust on digital transactions. The last couple of years have seen a sharp growth for digital payments as well as the fintech ecosystem in India. Over the last year and a half since its launch, the Unified Payments Interface or UPI has allowed full-scale interoperability in the transfer of funds. UPI has grown 21 times in the last 1 year, from 11 million transactions in July 2017 to 235 million in July of 2018, and it now aims to become an end-to-end digital transacting platform. So the question that we're asking today, are there still challenges that exist to the adoption of digital payments in India? What kind of reforms does the National Payments Corporation of India need to bring in and expand the presence of Unified Payments Interface to reach its full potential? And as far as the user is concerned, can we ensure a safe and seamless experience on the road ahead? Good evening. Thanks for joining us. I'm Shereen Bhan. Joining us on the show today to discuss those issues, Madhivanan Balakrishnan, Chief Digital Officer at ICICI Bank, Amrish, the CEO of PayU, joining us from Singapore, and also with us, Mahesh, Makhija, Partner, Financial Advisory Services at EY India. Gentlemen, appreciate you joining us here on the show. Manish, let me start by asking you, I mean, the numbers basically tell the story. Digital payments have been growing at a CAGR of 19% by volume, 12% by value, and the move has happened since FY13, but it's only been accelerated over the last 2 years. Given that, how has the ecosystem panned out? What does the EY FinTech Adoption Study and Survey say?
Yeah, I think, Shereen, it's important to put this in context. India today has probably got the most sophisticated payment infrastructure on the planet. Right, it's the number one country through any study you look at. And why I say this is that, firstly, there's real-time payments from a consumer perspective. You have like the virtual identifier, which really abstracts the account, and you can link that to multiple accounts. There's push and pull payments, and most importantly, there's the entire API around it, which allows third parties to innovate on top of this. So I think we are in a kind of era where there's going to be significant innovation in the years to come. Like UPI, like you said, is skyrocketing right now. The volumes are there. I think there's a bunch of innovative use cases which will revolve around UPI 2.0. So I believe that the future is extremely bright. The other part of it is we are already in the era of API banking. The UK and Europe, they thought a lot about PSD2, how do you get to open banking, etc. But we already are in open banking. Banks are opening up their payment APIs, and with the account aggregation framework of the RBI, very soon they'll be opening up accounts and transaction data as well. So it's really a pretty remarkable performance, and I believe that in the years to come, the volumes will go up further. More innovation benefits consumers, benefits merchants. I think it's quite a fantastic performance.
Okay, a good performance. I'll talk about the road ahead and some of the challenges that we need to deal with. But, I also want to talk about the opportunity and the kind of money that we're seeing coming into the payment space in India. And this is the EY data that I'm looking at. $4 billion of funding between FY13 and FY17. Payments have seen 65% of the investments. This on the back of the latest announcement, which is Berkshire Hathaway picking up a stake in 197 Communications, the parent of PayTM. Do you believe that this is going to continue to be the hot space that attracts big money?
I think we run this thing called a FinTech Adoption Index. We survey countries across the globe in terms of how consumers are adopting FinTech, and we found that India is number 2, just behind China, right? And that's where I think the money is coming in, because people are seeing consumers in India beginning to adopt digital payments. The government is taking a proactive stance. There's a bunch of innovative tech companies out there accelerating the move. Banks are opening up to the ecosystem as well. So I believe that, payments will attract a significant portion of the investment. Of course, lending being not too far behind. That's the other space which is extremely hot from an investment perspective.
Okay. Amrish, let me come to you. As we just heard Mahesh tell us about the many regulatory changes that have enabled the payment ecosystem to mature in India. As we move forward now, what are the critical changes that you would like to see from here on?
I think what demonetization did for the Indian payment system is much better than what was achieved in the last 25 years before that. When you look at what UPI is trying to do, UPI is trying to make money move faster, make money move like messages between two individuals or between a merchant and an individual. UPI 2.0 is a very interesting move which has been done by NPCI, which effectively allows us to go into larger business cases and larger use cases. I think from a government standpoint, over the last 4 years, what the government has tried to do is very, very good for digital payments. We have clearly seen an increase in that. When it comes to the regulator, I think Indian regulator is taking some very interesting stance. So when you look at what the regulator wants to do for P2P, what it wants to do for P2P lending, it is allowing fintechs like us to play in that space, find out what is working and what is not working, and then stepping in and creating regulation around it. It's very, very similar to what China did about 5 years back.
Right.
And it's for us to see how China and fintech has really progressed.
Okay, just a quick question there on UPI 2.0, since that's something that you brought out, Amrish. You know, what have been the hits and misses in your assessment so far?
So I think let's start with the hits, right? In the case of hits, it has really allowed us to move between two bank accounts instead of moving to a wallet, which consumers found it extremely cumbersome. Consumers don't want to move money into a third-party wallet. They rather keep money with their bank. And I think that is a fantastic achievement. In terms of setting up new areas, I don't know if you're aware, SEBI has actually come out with a new ASBA process, which is completely reliant on UPI. So it's allowing us to address newer sectors. So I think that's very good. In terms of misses, I really have two things to point out, right? One is for small value payment transactions, the second factor of authentication still exists. I think for transactions below 1,000, we should try and do away with that. The other piece is UPI 2.0 was supposed to come out with the recurring payment facilities. I think that has got extended for some period of time.
Okay.
But I'm sure that will be on the roadmap up there.
Okay, so not too many misses there. The two-factor authentication continues to be a cause for concern, especially when it comes to the user experience. But Madhav, let me come to you now. From a banking perspective now, take us through the kind of opportunities that you hope to capitalize on as we build this out.
See, from the banking perspective, it has been a fantastic development. And I would say we have had a roller coaster ride over the last 1 year. Like you actually pointed out, 21x times is a fantastic number. But there are nuances to it. In my mind, we are still talking about a big chunk of the transactions happening at extremely small ticket sizes. Yeah. While this is seen as more as an experimental story, at least the fact that the technology works, it has the ability to scale up. And for banks which are used to products like cards, switches, I think this has sort of dramatically proven the fact that scale is not a limiting factor. Now coming back to, it has actually revolutionized payments. So earlier, one of the success stories when it comes to digital payment system was IMPS. UPI has actually been built on top of that platform, and that has really sort of established itself as a good technology on which we can build further. One disappointment, if I were to put it that way, has been that it has been primarily driving P2P payments, which is very good when it comes to replacing checks. So smaller ticket sizes make sense, number of financial transactions are going up. But I think the genuine value for the ecosystem and for all of us put together would come in when we have person to merchant payments happening. So while the government has been extremely proactive in terms of reducing or virtually giving us a zero interchange for till the value of 2,000, I think ability to build more point of presences, bringing in more and more merchants, bringing in unique use cases is a very nice challenge for banks to have. And working along with fintech partners.
How are you addressing that challenge?
Yeah, so that's what I said. So everything need not be done by the banks. So at the last count, roughly 18 to 20% of the total transactions in UPI is happening on the P2M story. Right. While the primary reason at this point of time seems to be cashbacks are driving these transactions. Not a very sustainable proposition in my mind. But I think more use cases, whether it be B2B, whether it be B2, B2C, or B2C transactions needs to come up. So bill payments, recharges, but more importantly, e-commerce transactions. I mean, imagine cash on delivery changing to pay on delivery. UPI could be a fantastic enabling factor to make that happen. So use cases like this should drive this.
I don't know if the e-commerce players are ready for that, or in fact hoping for that at this point in time. That's certainly not something that they're looking forward to, because a large chunk of their business continues to be cash on delivery. But this is certainly, we understand, something that the government as well as the Reserve Bank perhaps are exploring today. But Mahesh, Mahesh, just to take that point forward on the user experience, whether it is the two-step authentication, which of course India has kept in place in order to ensure safety and security. But some of the other challenges, POS terminals, this has been something that has been talked about from the day that the committee was set up post demonetization to encourage digital transactions. Today a parliamentary report which basically talks about ATMs and the lack of ATMs in the country, etc. So in order for us to truly be able to move towards this sort of less cash economy, where are we on that road?
I think we are on the path. A lot more needs to be done. But if you look at the trajectory, right, I think India is going to leapfrog this entire POS investment, which has happened in the Western world. There's no need for a POS where you need to swipe, a card. If you look at some of the things which UPI 2.0 in fact has rolled out, if you just go one by one, one of the biggest game changers, I believe, is this link to OD accounts, right? So what you can do is link a UPI transaction to an overdraft account, which in sense becomes quote-unquote a virtual card, right? So so you don't need to run on card rails. You could run it through the UPI. So do you believe,
like Mr. Amitabh Kant does, that it's probably going to be the death knell for credit and debit cards very soon?
Well, I don't know if it's a death knell, but definitely I think there's going to be a forced move towards these kind of transactions where all players in the ecosystem will have to innovate, right? So it's not going to be just enough to have card rails on which you can run payments. You're going to have to add value-added services to it, right? So with linking to an OD account, and over a period of time, as banks see the behavior of consumers, it will start to operate like a virtual card, which will put pressure on the card companies to innovate. So I see that happening. I think, like we spoke about this entire thing about cash on delivery, which we just spoke about. I think that gets transformed with this one-time hold, right? So what you can do really is put a one-time hold through UPI on a user account, and then when the goods get delivered, and we love to look at our goods before we want to pay. Right. So then the hold gets released and the debit happens. I think that's a game-changing use case for ASBA as well, like Amrish just spoke about. The third thing is this whole thing about invoice in a box, right? So corporates could move a lot of their invoicing process to UPI and send collect requests. So you see a collect request come in, you're seeing, for example, who the invoice is from. You press a button and the payment goes. So I think there's a huge amount of efficiency which gets released in the system as well. And this is what we've seen globally, right? Just making the payment transaction itself smoother is not enough. You need to have other things in the surround ecosystem. So lending is a big part of this. Right. The link to OD accounts is one step on the way, right? I think the entire bill payment capability will be another thing to come over there. Chat interfaces, for example, like Google Pay has got a chat interface. World over, for example, in China, the whole thing happens through WeChat, where it's all about, having a conversation, and the payment is part of the conversation. So I think all of these things in the ecosystem, all of this innovation will spur the move towards digital payments and therefore less cash. Okay. So
Madhav, just to pick up on that point that Mahesh was making in terms of the kinds of innovations that we can expect to ensure that this move is in fact sustainable, but also to the point on whether we will in fact leapfrog the need for these POS terminals, etc. What do you think?
I share Mahesh's thoughts there. If you look at, again, the China model is something that we have been talking about. QR codes has played a very, very critical role in gaining acceptance through what, let's call it the phygital model, wherein you're using the mobile as the device of payment backed by processes like UPI and the QR code as the merchant acceptance device. Now, I think there is enough innovation which is possible in this hybrid world, wherein both these worlds sort of bridge together. So that's a big story. Combine that with UPI 2.0. On one side, you're giving credit, which raises confidence. You're not actually debiting into your own savings account. So that, I think, will be a big game changer. And that can work on both sides. And one of the things of UPI 2.0, which is the signed intent-based QR, again, brings in a lot more security, And while I still feel there are a few more guardrails that we have to put around servicing and stuff like that, but these are very good enablers. And this could be beginning, in a very calibrated way, opening out the payment and the acquiring system, and then hopefully grow from here.
Well, time for us to head into a break. You're watching Eye on India. We're back in a moment.